Well, well, well. Ain't that a surprise? CPI down. Trade deal with China done. Now, the poll does ask you what color shirt do you think I'm going to be wearing. Now, usually you guys like to look at the color of the shirt I wear and think, okay, price action means it's red, it's going to go down. No, we're celebrating the China deal, ladies and gentlemen. China, red, yeah. There's no down. I mean, don't get twisted. The market's going to get really manipulative by the time we get into the open, but we've had some very good information. Remember, $7.5 trillion is still stuck in the money markets. Investors, in my opinion, it wouldn't have mattered if the inflation data came in higher. They've got to put their money to work. Now, this deal with China has come through. Of course, Trump and Xi need to confirm it. So it's not done, but based on what Trump's saying, seems like everything is in order. So the trade war story has now come to a truce. Now the market can really start focusing on doing what the market likes to do. Rise. Today's CPI data kind of paints a very interesting picture, but more importantly, a very significant one when it comes to interest rates. The expectation now is that sorry, my head's fried, by the way. I have a beautiful migraine and it's just smacking me left, right, and center. So if I stutter in today's live, you know why. But interest rate traders have the expectation that the Fed's going to cut in September. That's why gold's going up. Remember, when interest rates are going to come down, gold goes up because you're not going to get a yield on the dollar, are you? Even though gold is a zero yielding asset, they're going over to gold. We're no longer in desire for a safe haven. Or are we? Euro's up. Yen is up. Dollar is down. So why are investors going into the stock market? They don't care. They want to seek risk. In today's live stream, I'm going to break it all down. We're going to understand what we can expect because it's going to get a bit tricky going into the New York Open because all the moves have happened. But by the time we're done with it, you're going to understand exactly where we are and what to expect moving forward. So if you are new and the poll, why is the poll now gone red? Like, why are you all clicking red? Because I've just appeared. That doesn't work like that. Anyways, let's roll with the program, guys. Here we go. Let's try and keep this live short and sweet because I've got to prepare a few things for the gang. Now, stocks are liking this, okay? This is a surprise reading. They were expecting 2.5% on CPI, and they were expecting 0.3% on the core price. The core CPI is the most important metric for the Federal Reserve. What's the two things they say when he stands up and goes, good evening, ladies and gentlemen, or good afternoon, ladies and gentlemen, good morning, ladies and gentlemen? What does he say? The Federal Reserve is still focused on their mandated target of 2% inflation and price stability. That's why the CPI month on month, core CPI, is the key metric for the Federal Reserve to work out whether or not they're going to cut the rates. That's what helps them make a decision. Why? Because CPI year on year is the result of the core CPI, when you think about it. Because if the CPI, core CPI, is going up, it means manufacturers and companies, businesses are increasing the cost of their goods, which naturally has an impact. Okay? Well, if that's coming down, which is what this is saying, it looks like inflation could be on its way down. Then the reading comes in and shows 2.4% with the expectation of 2.5, but not as good as what it was at 2.3. Is the Fed still going to say, yeah, come on? I mean, the crazy thing is they were expecting the inflation reading to come in higher only because companies were trying to adjust to the fact that import duties were being risen. So is this a good thing or is it a bad thing? Like, can we roll with that? Well, quite frankly, ladies and gentlemen, interest rate traders are betting for the cuts in September. Remember, the market is not the economy and the economy is not the market. So with that being said, let's go and have a look at what's going on in the charts to understand everyone's expectation of the future. Bitcoin, nice. Very quiet move by Bitcoin. I mean, it's even up there with XRP. Not got anything. And they did this last time. Inflation came in lower last time and everything sunk. But it's coming lower this time, and they've got every reason to believe things should be going higher. Money is going to be put to work because everyone is pumped on the fact that we've got ourselves this trade deal with China. Okay? Now, with that being said, just quickly going over to it. What's this? Bitcoin will be 150K, up 500K. Yeah, you ought to go. I know it's going to go there. I get that. I get that. But I'm interested in when Bitcoin can get above, 110,000 before we can focus 150. I mean, we improve the odds of it going there when it's at 130, but we're not even above 110 yet. And I mean, Saylor did come out today and he's saying like 1 million for Bitcoin. He's adjusted it now. He wanted 13 million. Now he's saying 1 million by at least the third quarter. He's saying, what was it? The era of crypto winter is over and there's a clear path now towards $1 million. They're talking about 150K, to be fair, in the third quarter of this year. So 150K, is it a possible place for Bitcoin to end up? I mean, it's quite a big distance given that this thing is not moving on the back of this information. But remember, the market's not fully open just yet, so we are going to see another reaction. Quickly going over to the bonds market to put things into perspective. There she is. Investors are stepping in now with the bonds. But remember, today, if I just go into my calendar, we are going into the second wave of auctions, which is the 10-year. Now, we've got the 10-year auction coming out today at 6 o'clock, and then, here we go. So the 10-year bond auction for the US at 6 o'clock UK time, 1 p.m. Eastern Standard. And then tomorrow we have the 30-year bond auction. If those bond auctions show success, then it tells us that foreign investors are still interested in US debt. They are no longer sell America, okay? So this is really important. If we do get a successful bond auction, then the day will be deemed as the perfect day for the marketplace. We've got the trade deal with China. Inflation is coming down. Investors are now looking for the idea of picking up US debt. But why would they be looking at picking up US debt? Ask yourself that question. Why would they? The bond market is now shot up on the 10-year. The yield is down 1.74%. That is wild. Go down to the 5-year, down 1.4%. 30-year is down 0.3%, no, 0.2%. And the 10-year yield is now nearly down 0.08%. So what does that tell you? It means that the expectation of interest rates in the future are going to get cut. So they're going to have to lock in some yield right now. So the guys that have locked in the 4.5% on the 10-year, they're laughing because they've locked that yield in, which is why the 10-year has now shot up. So when the yields are down and the bond market is up, naturally, the stock market is going to be showing that same flavor. NASDAQ is trading higher for the day, and it's very close to its all-time high. What else does it mean when the interest rates are potentially going to get cut? Gold, look at that. Gold makes the move to the upside to only pull it straight back. And this is why I say to you, always wait for news announcements, because they can pull the first move. The first move is the false move. They bring it back down. Then you'll get the flavor and the true essence of this when we go into the session. And then, of course, you've got the Asian markets as well. That's what's really important. They too will react to this madness that's unfolded. But the bigger picture is saying that investors in 7 days have the expectation that interest rates are going to stay at the 4.25, 4.5%. But by September, they are expecting the rates to be cut. And now this has been adjusted. It went from 54 to 57, okay? Now going into July, there is an expectation that they're keeping it at 4.25, 4.5%. But when we look at the data that comes out over the period of time, so if we just go into it, just remove that, and we look at more data, we've got core PPI coming out on Thursday. Now, the core PPI, in essence, is the cost of goods and services sold by producers. If that is expected to come down, but they're expecting it to go up, because it's now minus 0.4%, right? So it was low, but they're expecting it to come up. If we get a reading tomorrow that shows that it's down, that would solidify a rate cut. And traders are expecting that. So today is a wonderful day for the market from a macroeconomic perspective. Will they follow through with it? It's a different story. Now going into order flow with Bitcoin, I'm going to keep this live short and sweet for you guys just to give you everything that you need. So in front of you, you can see Bitcoin on the order flow. We've got interest down below here. We got 32 million at 108, 350. Then you got some interest up here around 110, 371. yeah, we got interest here, neither here nor there. I mean, Bitcoin's behavior is somewhat laggard in the sense of the reaction to this this CPI reading, which is a little bit of a cause for concern for me, because I'm like, hold on a second, Bitcoin, this is good news for you, you know? But they could still be in a state of accumulation. Going into the order flow to put things into perspective, just have a look at the high block itself. Just, oh, God, just go. Here we go. So we'll have a look at the liquidations and see what levels are being cleared out right now. So look at this. So we have got a relatively decent amount of long liquidations. This is represented by this green chart right here. And you can see we've got high margin traders. These are the short, not the short, but the low margin, high leverage traders down here. And you got quite a few people that are about to get liquidated very shortly. Yes, some people got liquidated on the short side of Bitcoin. And now we haven't even tapped into the short liquidity just yet, but we've got a relatively decent amount of high leverage, high margined traders at the top side of 113,000. So everyone who is running shorts on Bitcoin from those ranges, they could be in for a surprise, because if it does clear out the 113, and it's not too far away for Bitcoin, it's range daily high. In other words, the range that Bitcoin can travel in a day is right in front of you. Take the high. Where is it? Where's my thing? Here we go. Take the high, take the low, and it's basically a 5% range. Okay, that's the range from the lows of here to this high. Okay, there is a strong possibility that Bitcoin can easily break higher. I mean, we are close to the all-time high. We're not too far. And you would expect that today's data would give you that. But the market opens in the next 20 minutes. Okay, so we still haven't got the reaction that we want. We still haven't got the Brinks box just yet. Go over to Ethereum. Ethereum's not stopping, man. Look at it. It's just doing wonderful things. It just keeps on climbing. We're looking left, and we're about to come into a very significant area on Ethereum. Now, if she can actually clear this range, then that's going to be good news for Ethereum, because we go into the higher time frames. Ethereum's the only thing that's just been lagging completely, man. Bitcoin's cleared so many all-time highs, and Ethereum's just had the day off. All right. But you look at Ethereum on the higher time frames, you've got vector candle zones that we expect her to come and take. I am expecting in the longer term Ethereum to come and clear these ranges in the near future. Okay. I know a couple of you guys saying yesterday that you expect 3,500. This is the trajectory that I'm looking for with Ethereum, given that this accumulation right here is massive for Ethereum. They usually hold it and then they just drop. But the fact that she's holding this range right here could be consistent with the idea of maybe altcoin season. Who knows? But going to Bitcoin dominance, you can see it's starting to roll over ever so slightly. The actual ETF itself, not really seeing that much activity right now. Grayscale's getting up to its old stuff. It's moving Bitcoin into the mini trusts, moving quite a bit of Bitcoin. It's probably one of the most active players in this story with the ETF, but not seeing anything regards to BlackRock purchasing or not. Going over to this, an anonymous whale opens a $425 million bet on Bitcoin. Does he know something? Well, he's obviously killing it right now, but if he's made some profit, happy days to the dude. And at least he ain't going to be losing it. I mean, if he doesn't get rid of it, I mean, I think he's going to be holding that until Bitcoin does really break out to the upside. But to be honest with you, Bitcoin's movement is very, very muted. It's not doing too much. The problem we got is the euro still trading higher, okay? And the dollar dominance itself is trading lower. But again, the market needs to open up very shortly to really give us the idea that they are picking up dollars. Because dollar right now, 98.265, that's not good, man. Yen is trading positive also. So naturally, the stock market moving up on the fact that the dollars are being violated could imply that it's foreign investors going into the game, but they're not transacting on dollars. So, and if they are, they're using the power of strong yen, strong euro to convert into dollars to go put it into the stock market. Because fundamentally, when the dollar goes up, so does the stock market, because they're taking advantage of the dollar purchasing power. So when we get into the stock market open, if we just go over to the NASDAQ, to NVIDIA, NVIDIA's gapping up at the open. You got Tesla gapping up at the open. Microsoft is not doing too well at the open. It's actually gapping down at the open. Not even gapping down. It's not even doing it. No, it's actually gapped down at the open. So that's not too much of a problem for me. But Amazon, not flat at the open. Meta, That's flat, given that they just done this, they're going to do this $15 billion investment. It's only gapping up ever so slightly, but nothing to get all excited about. MicroStrategy, that's pretty much flat as well. So yeah, it's the market has effectively reacted to the news. And Bitcoin could be the clue, man. It could be the clue. Why hasn't Bitcoin made a big move up? It's done what it would normally do on just on a normal day, you know? Any questions? Questions. I saw the feed the other day on one speaker saying they believe this could be the last month of pre-tariff inflationary readings, which could be interesting considering 55% on China. Look, investors right now, they can see that the economy itself is surviving on high inflation. Well, according to the Fed, inflation being high, but realistically it's not. It's at 2.4% right now. But we've come from that difficult period. But it's high interest rates. And that's what's really going to encourage investors to come in, because they are expecting that rates are going to get cut in the future. That's why gold's been moving up. Okay. But Trump wants the Fed to cut because no one's borrowing dollars. It's too expensive. Go to Forex calendar right here. Look at this. You've got even the pound have pivoted just recently, but the Fed has not done anything. 4.5%, the pound at 4.2, Aussie at 3.85, New Zealand dollar, Kiwi at 3.25, Canadian dollar 2.75, Euro at 2.15, the yen practically free, and the Swiss literally practically free as well. You know, that's where your money is right now. It's not up here. You know, it's down here. People aren't borrowing dollars. They're seeking high yield from the dollars. But the problem is the bonds are going down because investors, in principle, are going to be seeking a higher rate of return because of the problem with the US deficit. And that's why the yields have been high for so long. These triggers that you see with the CPI get investors excited to lock in yield at the prospect that they are going to cut the rates in the future. But next FOMC, Powell will turn around and say, yeah, we had a good reading on the CPI data, but we need more data just to assume that it's not just an anomaly as such, and it is consistent with the readings. Oh, Powell, you flipping. I don't like the guy. Rate cuts in September. The rate cuts are due in September, ladies and gentlemen, because there is no way they're going to cut. And if Trump comes out, wait, let me just see if Trump's saying anything. Hold on. Here we go. We got something. Here we go. Wait there. All right, let's have a look. What we got here? Adding to the China readout, President Xi and I are going to work closely together to open up China to American trade. This would be a great win for both countries. Okay, so they're just fueling the market optimism right now that there is no longer the problem regarding trade war. So we're coming away from trade war right now. Now we're just going to try and dot everything off, the P's and the Q's and what have you, to then say, okay, then what's the impact going to be? Because they'll look at the actual criteria of the trade deal and they'll say, all right, then, how likely is inflation going to go up from this? I can work with that. But we're forgetting one other entity. The euro. Trump's been saying that China's been hard to do a deal with. Wait till he starts speaking to the euro, because that's where it gets interesting. The euro's already got things in place ready for countermeasures for Trump's tariffs. That's really where the problem is. Not China. Not at all. Anything else, ladies and gentlemen? Tino sounds bearish again today. Please shut up. No, I'm not bearish. I'm just giving you the facts. The yes and the no's. If you want to go in la la land, be my guest. But you're putting your money down, not theirs. And that's the irony of it all. Barclays, JP Morgan, Goldman Sachs, they ain't putting their money down. They're putting your money down. They just got a title behind it that says we're a bank. And people think that they know what they're doing. You know, Barclays, JP Morgan, they are optimistic that all their investors, institutional investors, are going to be plowing into equities. Bank of America believes that has most of their clients withdrawing from equities, but institutional hedge fund managers are plowing into it under that division. So no one's always going to be feeling the same way, my friend, you know? So, yeah. Do you think Japan is holding out on their bank rate as leverage in trade talks? Bank of Japan have still got this story that Trump wants them to stop manipulating the rates, right? This is how it is. With the euro, it's Trump Doesn't like the fact that everyone is relying on the euro. Now the euro has become a safe haven. That's really aggravating Donald Trump because it has an impact on the dollar. Remember, the euro makes up 56% of the dollar dominance, which means that most transactions on the dollar are influenced by the euro, okay? Secondly, the Bank of Japan, of course, with the carry trade and what have you, Trump's not bothered about trade with Japan. He's bothered about Forex manipulation because Japan effectively controls the outcome of what the dollar's going to do. Because if dollar yen goes up against it and dollar keeps on appreciating, that's good news for the dollar in principle, bad news for the Japanese. So what do? They buy a bulk of dollars, convert them into yen, bring dollar yen down. Trump doesn't like that. It's called Forex intervention. He calls it manipulation. They call it intervening because it really does hurt their economy if the dollar is going up too much. As of late, the dollar's been getting smacked. Donald Trump doesn't like that. So that's really, in my opinion, China trade deal. China trade deal is just all about, is your iPhone going to be more expensive or not? That's all it is. And is tech going to be costly or not? That's nothing to be worried about. But when you've got control over the US dollar, which the Bank of Japan technically does, when you think about it, all they need to do is buy a big batch of dollars and then bring dollar down. And it's the biggest carry. So, and it's the cheapest currency. Costs them nothing to borrow. Do you understand that? If I said to you here, go and borrow $100 billion in capital, go and pick up yen. You're right. How much the rate? Less than 0.5. Thank you very much. I'm not even going to bother listening to the rest of it. Go do the same with dollars. You're paying 4.5. No, thank you. Just scrap that. That's what it is. Lehman Brothers thought they knew what they were doing. Yes, that is very, very true. Are we buying the worst? Are we buying your worst nightmare and selling your dreams? Maybe. Tina, why is the VIX up? Because they're hedging. The volatility index is not really moving up per se, but, well, it's not up. The VIX is not up. The VIX is down. Complacency, ladies and gentlemen. This right here is complacency. But what did I say to you? We need to hit an extreme. This needs to hit an extreme before the market turns. And we're going to keep coming back to this chart. And it's going to hit an extreme. That's when we will start to offload and run shorts. That's not financial advice. It's common sense, man. Dumb money's all the way up here. Yay. Prices are rising. We keep on buying. Yes. Smart money on the other side of the coins, like these dumb motherfuckers. Wait, you just keep selling to them, man. Just go. Are they still there? Yeah, keep going, man. Keep going. They're all-time high. Don't care. They're happy to pay for it. You want proof of that? Here we go. Where is it? Let's go and have a look at let's go and have a look at someone that buys at the highest point. Here we go. What? Yeah. That's someone buying at that point, sir. And buying up there. That's fucking sore, that is. That's sore. Oh. I mean, he tried it, but he flopped. He did all right, but he got greedy. He come all the way. I mean, he did brilliantly going short at that point. Came down, didn't pay himself, got liquidated, and he came back down again. He must have been really cheesed off about that. Don't buy premium. That's all I'm saying to you. Complacency is happening. VIX is down. When it's down, everything goes up. Be careful. It's a vector on that. As aggressive that they are acting in complacency and going into risk, equally it's going to trigger some other people to be like, hold on, let's close. And that could end up bringing it back up again. I think it's going to be a very interesting day, to say the least. NASDAQ's doing very well for the day. It's in a slow move up. But let's just quickly go over and have a look at what we've got here on the short-term pro shares, fixed futures. Okay, they're gapping up. Have a look at SPX, how that's doing. That's just doing perfectly fine right there. Okay. 10-year bond is moving up. That's all right. And Bitcoin's doing fine. All right, then. Well, how many of you like the stream? 300 of you. I don't get... Come on, man. The poll has got more votes than the likes. For God's sake. Doesn't make sense. Be sure to hit the like. Remember, guys, I've got this. I've got the FOMC in 7 days. And if you're not here for the FOMC, you're going to miss out on Powell and the amount of jokes that we get during that time when we're trying to make sense of this madness with macros and what have you. Okay? So, yeah, just like the stream. And if you are completely new to this live stream and they're like, why has this guy got all sorts of candlesticks with special colors and boxes and all of this mad stuff, just go to the Traders Reality website homepage. Download that PDF. It's free. I'll show you how to trade with the hybrid system in that PDF. Okay, and there's a little challenge in there as well. Let's see if you can do it. But yeah, the video explains that, and you download the indicator right here. And then if you want trade setups, which is what I provide on a day-to-day basis, if you watch yesterday's live stream, I break all of that down. You can go and become a platinum member and check that out. Okay, cool. With that being said, you're going into a market open in the next 5 minutes, ladies and gentlemen. 25-minute live stream. I think that is workable with you guys. And I will say this to you. Just be very, very careful going into the open. Wait for the Brinks box to complete, which is this box right here, which means 3 p.m. UK time, 10 a.m. Eastern Standard is when the market's fully absorbed information. Remember, we've got to react to the inflation data. Remember, we've got to react to the trade deal in China. So give the market a chance to find its footing. And if you're going to take on risk, use small size. Because if your risk to ruin is increased massively every time you take a trade, why are you trading? If you're just trading for shits and giggles, okay, cool. You know, 200x, happy days. I used to do that, but I was using 5,000 to 1 leverage. Yeah, back in the day. Turning like $10 into like 5 grand. It was brilliant. Brokers didn't like me then, but never mind. But that's why they stopped doing that. It was 10,000 to 1 leverage as well back in Forex. Anybody knows Trader's Way, the broker, you'll know exactly what I'm talking about. With that being said, ladies and gentlemen, mad love and respect. I'm going to tune into you all later on. I've got to go fix this head of mine. Take care of yourselves, gang. Peace.